Futures bounced on Sunday evening into Monday morning on Italian Prime Minister Monti's 30 billion euro austerity plan. Anticipation for big news out of Europe later this week is pulling the market up. Brent crude is up over $110 as Iranian tensions rise and gold is steady. I'm Debra Borchardt with The Street, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Debra Borchardt with The Street, and together we're bringing you the morning call. So Scott, Monday morning, another gap up. We've had a couple of headlines out of Europe, a €1 trillion rescue plan, and it looks like the Italians found their religion. They're making some cuts.
Yeah, so here we are with another gap up. I think what traders want for Christmas, which they're starting to write to the North Pole, is no more gap ups. No more of the gapping game. Why don't we just trade some action intraday? That's why you talk to traders across the board. They're just so frustrated because every day you have these big gap ups and then the market does nothing. But lo and behold, we're making progress. So that's why you have to just make your trading plan a little bit different and hold things a little bit longer. And we've been talking about now perhaps, holding your 6 to 8 positions that you like, but also having a hedge against it so you could sleep at night. But I think what's important now is, now that this is on the table, the next thing the traders are going to look at is Friday.
All right. We have this big European summit on Friday. Everybody's got a lot of expectations. Who knows if they're ever going to really be able to deliver. They're very good at talks. They're very good at meetings. But let's talk about that S&P 500, Scott, because for 72 years in a pre-election year, our markets have ended on an up note. So we're going to make it 73.
Well, it seems like now that the market is being like glass half full and we had last week's move, it could continue because we're in December. Historically, December also, besides the election year thesis, is strong, and strong stocks end stronger. And then weak stocks also have that January effect. So if you take a quick look at the S&P, you'll see on 2 different time frames. First, the daily, we are right back where the market was when we resolved this wedge to the downside. If you guys remember that October 4th reversal low, that day to take notice that we talked about, and we hit that target of 1292 real quick. And then you had this little wedge resolved to the downside, right back here. So on a macro level, we're really looking good. The micro trade's been difficult, but now we failed at the 200-day on Friday into the jobs number, but not a big deal considering where we came from at this point now. Can we get above 1260, 1264? Can we close above it? And could that ignite a move above this trend line to the highs of the fourth quarter and maybe into January, February, about 1320 to 1340?
Well, Scott, that's the daily chart, but let's take a look at that weekly chart because it gives us a whole different picture on this market.
Well, I think some traders and funds are starting to look at the weeklies a little bit more because if you trade on the daily, lately you're getting very chopped up. If you're on the weeklies, they've told the same story. And on the weekly chart of the S&P, you'll see that we have a nice tight pattern. It never violated this downtrend. This was a very sharp move. We're right back to this downtrend line, which you could really use as a barometer. If we start to break and close above this, which we haven't since late May of 2011, you're going to see the trade change. So above this 1270 or 1265 area, and then even 1292, this will be very bullish for the first quarter or half of next year.
All right, Scott, let's drill down into some of the sectors now. Let's hit some of our highlights. Talk about the Qs. We've got a lot of tech companies doing their mid-quarter updates this week. We've seen this theme of the semis bottoming. So are we going to see a lot of boost of headline news out of this?
You always, in a healthy market, you want to see tech lead. You want to see innovation go first. And that's not happening right now, but it's not a perfect world. The Qs here just failed at some resistance, so rightly so. If I go back to this daily chart, you will see that we just snapped back here also. It definitely went further than you would have thought. Like when the market got beat up, tech got beat up fast, but then it just snapped back just as fast. Friday, bit of a reversal bar into resistance, but no big deal. I think it's going to take some time to get through this 57 to 59 zone as far as the group overall, but I do think you're going to get spots, you're going to get strong stocks in tech that go further and faster in December, and then you might even get some of the battered and bruised ones perk up, with the tax law selling being done.
All right, Scott, I mentioned that Brent crude was up. I feel like it's 1980. I'm talking about Iranian tensions. So we're starting to get a lot of headline news about the oil service area and the oil and that group.
So with those headlines, that's probably going to keep a bid in oil because who's going to want to be short if something really crazy happens? And that means some profits for the refiners. And I talked about this inverted head and shoulders pattern in the OAHs, which actually equal a bigger move. not just like a quick move. It means that something or a group you could focus on and maybe hold longer term. So if you look here on the OAHs, you will see that this group has an inverted head and shoulders, which is a bottoming formation. So here's the left shoulder, here's the head, here's the right shoulder. So this is accumulation. So this is your tier 1 accumulation phase, and then once it starts to break above this trend line of about 130 or so, then you get into your momentum breakout phase. So now's the time to be accumulating some of these stocks in this group, and we'll talk about those stocks later.
All right, let's get into the industrial sector, because you said you talked to Stephanie Link last week. She's like an industrials. I talked to Dennis Gartman. He's like an industrials. So let's look at them.
So first of all, when everyone likes something, I don't like it, but they're very
right.
smart, and not everyone likes the industrials right now. So if you align that up with the industrials as a whole, with this chart pattern, a lot of people are saying it's cheap, low PEs, so that's what people are looking for. This is already back up at resistance, so perhaps if you bought some on the dip here, I think you watch this go sideways a little bit, and then you might start seeing some momentum in industrials, and that hasn't happened in a while. Next resistance will be this moving average around 34.62, but then at some point next year, doesn't seem like we have a bigger resistance up until about 37, so that's a nice move, and I'm sure stocks within that group will outperform, and there will be relative strength and alpha there.
All right, let's take a look at the retail. You know, we are in the holiday season, so how does that look?
It's been like a little bit of a have-not scenario. In the last few months, retail's been the place to be. You've seen some sustained moves in the big names like a Walmart. You saw big moves in like even Deckers, Under Armour, and then you saw like Tiffany's get hurt. You saw even Lulu was choppy into the earnings, and then it was a good trade. So if you look right here at the RTH, you will see that this group is still hanging around. It's not ready to break above into new highs, but this still looks good here. With a little bit of a pause, if it could hold above this, top third of this upper range, this might be the group that makes new highs first. But it's been a stock picker's game within that sector.
All right, Scott. Well, we have seen the financials and the energy lead. We're going to talk about those financials in a minute after the commercial.
Sounds good.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Scott, let's go in the trenches with the banks. Now, Goldman Sachs is having a financial conference this week, so we will probably start to get a lot of noise about financial names as we go throughout the week.
And what's important is last week you had the oversold bounce, and so many times this year, if you bought these stocks after that initial move, you got hurt. So if you take a quick look at the XLF, you will see that we just had a move into resistance. So take a look at the chart, and it failed somewhat on Friday. So now the question is, can we hold higher? Can perhaps momentum stay? So I would say that line in the sand is right around 1260. You had a move from 11. I talked about Alex actually Wednesday saying we could see a move back to 13, 13 and a quarter, and that's where we failed. So a little bit of sideways action, hold higher, then perhaps we get above Friday's high, and then we could see a move back to this moving average, at some point, in January or above, and that would be a decent move in the financials overall. But you have to really pick and choose your spots and not blindly buy them and have some commitment.
All right, that group is down 18% for the year, but let's take a look at Goldman particularly. I mean, Goldman has just stunk it up this year.
Yeah, Goldman has been nothing more than just a trade. And it's been a good barometer, though, at times for the actual group itself. So let's use it as a barometer again. So if you go to Goldman Sachs, you'll see that it does give you clues. Last time we played Goldman Sachs, you had that reversal here. And then if you remember this downtrend we talked about, this was that buy price. This was 98.50. You had your follow through to the upside. And then if you remember when things were getting choppy, I was like, if Goldman breaks below 104 area or 102, you could see pressure. And then pressure we did get. So at this point, we held higher. Some are saying there's a double bottom in Goldman. It just pushed to as high as 102. I would say for this stock, let it trade above 96, 97, go sideways. If it could hold higher, show some commitment, perhaps you see a move back to 110 or even as high as 117 at some point, because we were just there in the end of October.
Right, and I have heard so many traders say this is the bottom for financials, and boy, they've gotten their hat handed to them. Let's talk about Bank of America now. We've had a lot of noise about these foreclosure lawsuits, and obviously that's going to hurt Bank of America.
Yes, and that's why, again, it was the bank that went to the lows first. But it did bounce off that 6 area, and I know Moynihan is having an investor conference this week, or he's meeting with his investors. He's going to try and shore up some confidence. And I know Merrill's been actually acting very well within Bank of America. So I think you could still be long some Bank of America. I'm not. But if you look at the chart here, you do have some more room. It did come off, I guess, if you want to grasp here, like 75 cents. I would say that it has until resistance around 615, and on that Buffett news, it went as high as 7 and change. So I think it'll be a slow crawl back into this area. I would not be short Bank of America, but I would only be long small. And unfortunately, too many people have been trapped in this thing for years, and they never sold. So hopefully, it comes back for them. That would be good for investor sentiment.
Another piece of information that's good on these financials is that credit card usage is up. So if you've got a name that is dependent on credit cards, you're going to do well. And JP Morgan seems to be one of those names.
Well, the pure play credit cards have been awesome.
Yeah.
Visa, MasterCard, those two stocks we've talked about so many times. They're at 52-week highs. If you're in them, congrats, you followed your rules. As far as JP Morgan, that's interesting because perhaps it'll do better than some of the other banks, not at 52-week highs, but it might bounce back quicker, and we saw that on Friday. JP Morgan had a quick move through the moving averages. It didn't close on the highs, but this also held the recent low. So if you're positioned versus that low, you got to push through. But there's a lot of resistance right around here. A lot of resistance in the 34 to 36.5 area. So if you did buy back here, I'd say just let it continue to go higher. You have some room up to about this 36 area. That might not happen tomorrow, but you have some room to stay with that trade.
And here's a name that I thought we would not talk about again, MBIA. Seems like apparently they are pushing to get any lawsuits or anything revolving around MBIA to get them resolved, get them out of the way. There was an article in the Wall Street Journal, an article in Reuters, so a lot of noise, and that stock lifted.
The funny thing is, you said that a lot of people thought they'd never hear the name. Well, it's true because a lot of people thought it was a zero. Obviously you look at the sister, who was it, Ambac? Or, so that group, they were all considered, thrown out, that they're going to be under nationalization. And MBI, it never happened to them. So when you have some decent news or perceived good news, you have a short squeeze. And if you take a look at the chart, look at what happened here. A lot of my traders were all, clamoring about it or saying, what's going on with MBI? What's going on with MBI? You had a little descending channel here. It woke up and then it traded through this resistance, and it was a fast and furious move. At this point, I wouldn't be chasing it, but I would just be careful shorting it because it just took out a lot of resistance here, and it really is nothing in its way until about 12:13. I wouldn't chase it, but just don't blindly short this because it moves with the tape. Or with headlines. You
mentioned MasterCard and Visa earlier. Would you put fresh money into these stocks? Because they seem to keep going higher and higher.
At this point, I never like to buy something at a 52-week high. Sometimes there's momentum trades there, and if you want to buy it for the longer term, just do it and know that you're paying near the high, so it's going to take some time. So maybe do like a tier 3 system where if you want to go real quickly with MasterCard, it's just hard. Like in the bases where you usually buy it, maybe you buy a pull-in, so it's hard to buy a breakout. If you would see a test here, perhaps if it could do it, if you could test this prior breakout around, what is this, 370-ish, this is where I would like to see you buy MasterCard, and then hopefully it resumes that uptrend. So at this point, just if you're in it, don't sell it. If you're not in it, do it with a strategic plan.
All right, Scott, let's do some quick hits right now. Let's get into some of these names. Now, I mentioned that we're going to see a lot of tech companies give the mid-quarter updates. But let's talk about Apple. There is a judge coming out, and he's making his decision about HTC and whether they've infringed on Apple's patents. So that could move things a little for Apple or HTC.
Yeah, and Samsung also. I think a lot of stuff's going on with their Galaxy. I think Galaxy won a situation today where they're allowed to sell their Galaxy, and it's actually a really good product. My mom has that, and I had the iPad. We were going back and forth. It has some good functions. But anyway, Apple has been a tale of two different stocks this year. And it was really weak in the last month when it broke below that 395, and then you had your snapback. So depending on your time frame, you could have done a lot with it. So if you look here, on Apple, this is when I think I was on Street Signs and I talked about shorting Apple around 395 for a test to the 200-day. We are now at the 200-day, and if you look here, you had a nice bounce right back to where it failed. So at this point, I would not be just buying this gap open in Apple. Some traders might be looking to short it into resistance, and if you did buy it, I listed it as a trigger buy on my price point sheet around 376, and it was a nice little move. If you're in there on a macro basis, I think you could hold it, but traders definitely pick and choose your spots.
All right, let's briefly hit on Amazon. They've been gaining share in their e-commerce, but it has not been reflected in the stock.
Yeah, Amazon's been basically broken ever since the earnings. It never filled the earnings gap, and also it went below the 200-day. Traders are trading it, but there's not much opportunity there. If you're an investor, you're in the penalty box. Just be cautious there because it's not acting like the old Amazon.
And let's talk about IBM. Here's an old name, but it's new again.
IBM's been doing great. IBM, Warren Buffett put an investment in there. It's been technically acting much better, even well before him. I think if you're an investor, stay with it. And if you're a trader, it starts getting above 190. Perhaps it gets some momentum for a trade for you as well.
All right, let's just talk about Google real quick because everybody loves Google.
Well, it's funny that everyone loves Google now, but it's been acting a lot better. But Google's been in like a 3-year channel that it hasn't broken out yet. Everyone thinks Google is so pricey. It really isn't. It's done absolutely nothing. It just needs to do a stock split to get more following. But anyway, you look at the chart of Google. It had a huge snapback on the daily. So it's hard to enter. I'm long Google right now. It's hard to enter more after a huge move. This was your trigger around 575. But if you go to the weekly chart, it doesn't look like this. It looks very, very tight and looks like it's ready on a weekly or monthly basis to clear this resistance. And once you clear this resistance, you could have a move well back to those old highs from 2007, around 700. So this could be a really good name for 2012.
All right, Scott, let's wrap up our quick hits with SanDisk. They are reaching 52-week highs. You just said you don't like that.
No, you like it if you own it. You just can't initiate it and trade it when it's there. And SanDisk, we talked about it when it broke its downtrend. It's been consolidating since. And if you look here on SanDisk, it also changed its tune a few times over the course of the past few years. And if you go to the daily chart, actually, let's keep this weekly here. A break and close above this like 53 area, and this thing could go a lot higher on a daily basis. We talked about it when it broke this downtrend. Okay, that's why I like to show you downtrends, because when it breaks it, you get good moves. So when it broke above 444, this was like my macro buy point. You had a nice move, and now it's trying to consolidate, stay above it. And with time, this is in the game for new highs also. Nice looking tech stock there.
All right, Scott, well, as we mentioned, this week we don't have a ton of great economic data out. Some little economic reports. Factory orders ISM today. On Wednesday, we got consumer credit. Friday, Michigan sentiment. I hate that report. But, we're all watching this European summit on Friday.
Right, so you have that on Friday, and they're going to be making statements. I think Merkel's actually speaking today. And then you have some of those conferences that we mentioned. So there are some headlines to look out for. What the key is to know what traders and what market participants are looking to hear. So then once the market responds to it, you know whether or not it was a good response or a bad. And as far as those halftime reports, if we get confirmation from just, I think Texan is on Thursday that they're redoing their inventories and demand is higher. I think the banks, if they come out and say anything that's just somewhat positive, because people just want to hear something positive out of these banks, and they can continue. So there's a lot to see. We had a big move. Don't just chase it, but be involved in it, and don't be scared of it, because it can make you money if you know how to trade it.
All right, you got to be a nimble trader in order to make that money.
That is true. And if you follow us on the virtual trade floor in the chat, we help you guide along the way, show you relative strength, weakness, and when those headlines hit, we help figure out if it's good or bad. So there's more to it than just a morning call and the recap.
All right.
Have a great day.
Thank you, Scott.